Deborah, thank you very much for your time to join Top Investors Talks. China first. Is China a buy or a sell? So generally, which camp are you in?
We are very firmly in the camp of seeing the market turbulence as a long-term opportunity across financial markets. We do not believe the recent volatility in any way alters the long-term case for investing in China. In fact, we've experienced unusual volatility in many markets across the globe where we might say the same thing. Let's remember that China equity markets have performed strongly in the last several years, and it's healthy to go through a period of consolidation, allow valuations to come back to more reasonable levels. So as a global active manager, we've always believed in the long-term value of local markets. And more generally, it is often the case that the best returns come after the periods of weakness and turbulence, as we have seen this year.
But, in China, recent regulatory clampdown and high-profile corporation difficulties have tested investors' commitment to China. Should they be concerned?
In fact, regulatory changes cause investors to pause everywhere around the world, in Europe and in the US as well. So it's only natural that global investors feel concerned about changes in China. So the first is that regulatory changes can lead to a sense of greater uncertainty wherever those changes occur. But in addition, many of those investors are relatively new to investing in China. But Ivan, I should add, as a global active manager, helping our clients better understand more local elements is really a key part of what we do. The reality is that many of the issues that authorities in China are currently tackling are similar to those faced in other countries.
Yes.
And faced by families around the world. And in this context, a lot of what is happening in China at the moment becomes far more understandable, including to our clients who have less experience in China. The large majority of our clients have clearly maintained their investments with us, and like us, they really believe in a long-term commitment to China in their portfolios. So nothing's changed there.
You said that you are a global active fund manager. Now, are you allocating towards or away from China?
Oh, towards China, definitely. As an active manager, as I said, our philosophy is long-term. And of course, where we can, we like to buy low and sell high. So we seize opportunities to benefit our clients. And every day there are new opportunities to buy into stocks in China. And all the more so today as they come back to more attractive valuations. Most importantly, though, we see China as one of our top investable themes. And it's actually one of our 3 global themes with our clients across the world. So we're confident that investing now in China will be no doubt rewarding, and particularly when our clients look back in the years to come, they will recognize the value of investing today.
After the series of regulations, are you more optimistic or pessimistic on China? You always mention long-term. What is the long-term play here in China?
Well, so I'll say long-term again. In the long term, we remain optimistic in China. For us, it really is always important to look beyond the short-term market noise and to focus on the fundamentals. Investing in China does not only mean investing in domestic economies as well. So remember that the growth of China also creates an important income stream across multiple global companies. So thanks to the liberalization of the domestic capital markets, if you look at the numbers, over $200 billion have been invested into China markets through Stock Connect since it was launched at the end of 2014. And those numbers continue to rise. Every month this year has seen net positive flows through Stock Connect, despite all the macro events. So the message from clients and from our clients is that they now see an allocation to China equities as a structural part of their portfolios. and they remain committed to this longer-term view, which we share with them.
Let's talk something about ESG. Every guest of this show tell me that they are very ESG. In terms of ESG, what makes AllianceGi different?
Okay, so this is a great question. Sustainability and ESG have long been a part of our thinking. We didn't discover it recently. In fact, AllianceGi's first equity SRI fund was actually launched in 1999. I think in terms of differentiating, one is our proprietary grassroots research. We leverage grassroots research to help us better carry out in-depth fundamental stock research. Two is something we call Risk Lab Solutions. So we are currently building out a dedicated team of ESG professionals within our solution advisory capabilities. This is important because our objective is to not only focus on ESG at the product level, but also to advise our clients on a total investment portfolio level.
Yes.
By providing more comprehensive solutions. It's really relevant in China, where ESG has taken on a much greater importance, but investors may be still new to thinking about how to integrate it into their portfolios. So that's a second important point. And the third, for us is our ability to combine this broad ESG experience and history with our long history in portfolio management and knowledge in China. And I think the evidence of our experience in China is probably best demonstrated by our managing one of the biggest China A-share mutual funds in the offshore markets. So there's a unique combination there.
Let's talk something about inflation, the very hot topic now. We see the inflation part is get hotter and hotter now. So will that inflation pressure last longer than we initially expected?
Over the long term, we of course remain concerned that the inflationary pressures may stay resilient. That being said, we firmly believe, that a number of the current inflationary pressures really are transitory. COVID-19 clearly caused huge disruptions in the normal function of human society. Person-to-person contact's been changed, and in many places continues to be discouraged or prohibited. But we can also clearly see that economies that have addressed the virus more aggressively, such as China, have also rebounded more quickly across multiple sectors. I think these spikes will consider, the question is how long is transitory, but we don't think that it's permanent.
How long is transitory?
No, it's a little bit like saying how long is a moment. It's very hard to define. I think some of the factors that we mentioned will be determinant. For instance, how long this sort of supply chain bottleneck lasts, how quickly some of the authorities decide that they're going to raise rates rather than just taper. So I think there's a number of factors. And then, the growth in economic demand, if it's going to be sustained over a longer period of time, or if we have a current spike.
Yeah, you are an active fund manager. What is the trade play here now? I mean, how to turn the inflation, even transitory, into an opportunity?
Well, it kind of picks up on the themes we've been speaking about. So in China equities, for instance, the areas we've been focusing on are renewable energy, electric vehicle supply chain, innovation in the healthcare sector, and the development of China's domestic technology hardware sector. And I think healthcare is something that has actually become much more the focus, not just in China, but globally, as an investment theme. But I have to say, we don't really see these as trades. We consider them more as long-term structural growth opportunities. So our mentality, again, is long-term in identifying these current investment themes. Renewable energy is, of course, especially interesting.